let me first ask you, before we get to the earnings, the outlook, the share buyback, and the dividend, let me first ask you, what's your outlook on the impact of coronavirus to your company?
Thanks very much for the question. At the moment, we don't believe that coronavirus is going to have a material impact, frankly, either on Swiss Re or the insurance industry through what would be claims, either in the life and health space or, frankly, in the property casualty business interruption space. That could change if the nature of the infections change, but for now what we've seen, I think, needs to be put in perspective. If you think in an average year, there are between 3 and 5 million cases of severe influenza worldwide, and in that normal year, somewhere between 290,000 and 650,000 people actually die of influenza and seasonal illnesses. So the 2,000 related to COVID-19 is a serious number. We're trying to get to the bottom of this, working with our Chinese primary insurance companies that are partners with us. But at this point of time, it's not a pandemic, and it's not necessarily a major event for the insurance industry.
But nonetheless, you do have a lot of flights canceled. We talked to the CEO of AP Moller-Maersk today. They've canceled a lot of container shipments out of China. You've got, hotel rooms that aren't being occupied. I mean, business and the economy have been substantially impacted. Does none of that come back to a reinsurer?
So you're absolutely right. There are going to be very significant economic losses along the way. At the moment, we don't see these as sources of significant insurance claims. On the other hand, we've got two sides of our own balance sheet, including the asset side, and we're taking a strong look at how we continue to invest our own money, to be sure that we're not caught off guard by some of the specific impacts to specific companies.
You have had a really strong performance at your life and health businesses, but the property and casual business there, the combined ratio is, I believe, around 107%. And, you still have a target, 108%. You still have a target of 98%. What can you do about that, and how is that going to affect your bottom line and returns to shareholders going forward?
Yeah, so a great question. 2019 was a tough year for our P&C reinsurance business. As you said, we saw natural catastrophes and large man-made losses of about $2.3 billion. Our property insurance book remains positive for the year. In spite of these losses, we receive large premiums from the primary insurance company to cover these risks, but the profitability for P&C Re overall for the year was limited down to a 4.8% return on equity. We expect continued improvements in pricing. We saw some of that for the January 1st renewals, and we expect it to continue when we renew policies in Japan, typically around the 1st of April, and in some specific parts of the U.S., Florida, and others in June and July of this year. So the major impact we're seeing is a opportunity for prices to go up to cover what seemed to be a larger risk, especially on casualty claims, but in some cases also on the property and natural catastrophe positions.
Let's get down to the bottom line. Your net income rose to $727 million from $421. You've boosted the dividend. You proposed another share buyback. How is 2020 looking to you so far, John, after such a banner year in 2019?
Yeah, so you're exactly right. The profits were up. The management and the board are feeling very positive about the book that we've renewed and the overall position we've got in this market. We see pricing increases not just in the reinsurance sector, but frankly in the primary insurance space. The one business we have, which is in the midst of a significant restructuring, Corporate Solutions, saw price increases for 2019 of 12% for the year, and in January another 14% year-on-year for the businesses which were written in January. So we're, I think, pretty optimistic about how this looks. We've lowered our estimate for the combined ratio of reinsurance on a normalized basis in 2020 down to 97. and we retain our target for the corporate solutions business through the restructuring in 2021. We expect to get that combined ratio down to 98.